Did you know that in 2023 alone, AI tools for trading saw a staggering increase in usage, with over 70% of day traders incorporating them into their strategies? This staggering statistic highlights the growing importance of AI in the world of day trading, and it's easy to see why. AI indicators have the potential to revolutionize the way we trade, providing us with accurate and actionable insights that can help us make informed decisions in the markets. In 2024, AI is no longer a novelty, but a necessity for any serious day trader. With the ability to analyze vast amounts of data in real time, AI indicators can help us stay ahead of the curve, identifying trends and patterns that would be impossible for humans to detect on their own. As we move forward in this rapidly evolving landscape, one thing is clear: AI is here to stay, and those who adapt quickly will be the ones who reap the rewards. Day traders face a multitude of challenges when it comes to identifying effective trading indicators. One of the biggest hurdles is information overload. With so many different indicators out there, it can be difficult to know which ones to trust. This is especially true for new traders who may not have the experience or knowledge to distinguish between reliable and unreliable indicators. It's easy to get caught up in the hype surrounding a particular indicator, only to find out later that it's not as accurate as you thought. Another challenge that day traders face is the emotional aspect of trading. Fear and greed are powerful emotions that can cloud our judgment, leading us to make impulsive decisions that ultimately cost us money. Effective trading indicators can help to mitigate these emotions, providing us with a clear and objective view of the market. But how do we know which indicators to trust? The answer lies in understanding the underlying mechanics of each indicator and how it analyzes market data to provide trading signals. This is where AI comes in. By leveraging the power of machine learning and natural language processing, AI indicators can provide us with a level of accuracy and reliability that was previously unimaginable. But with so many AI tools and algorithms available, it can be difficult to know which ones to choose from. Do we go with a simple moving average crossover, or do we opt for a more complex machine learning model? The truth is, there's no one-size-fits-all solution when it comes to AI indicators. Each trader has their own unique needs and preferences, and what works for one person may not work for another. That being said, there are certain AI tools and algorithms that stand out from the rest. By analyzing vast amounts of market data, these tools can identify patterns and trends that would be impossible for humans to detect on their own. One of the most popular AI tools for day traders is the Ichimoku Cloud, which uses a combination of moving averages and cloud charts to provide trading signals. Another popular option is the Bollinger Band, which uses standard deviations to identify volatility and trend reversals. While these tools can be incredibly effective, they are not without their limitations. The Ichimoku Cloud, for example, can be slow to react to sudden changes in the market, while the Bollinger Band can be prone to false signals during times of high volatility. So what's the solution? How can we create an AI indicator that provides accurate and reliable trading signals without the limitations of traditional tools? The answer lies in creating an indicator that uses machine learning to adapt to changing market conditions. By analyzing vast amounts of data, this indicator can learn and improve over time, providing us with a level of accuracy and reliability that was previously unimaginable. But what does this indicator look like in practice? How does it analyze market data to provide trading signals? Let's take a look at a real-life example of this indicator in action. In this example, we can see how the AI indicator is able to identify a clear trend reversal in the euro to US dollar currency pair, providing us with a profitable trading opportunity. But how did the indicator arrive at this conclusion? What kind of analysis did it perform to identify this trend reversal? The answer lies in the machine learning algorithm that powers the indicator. By analyzing vast amounts of historical data, this algorithm is able to identify patterns and trends that would be impossible for humans to detect on their own. In this case, the algorithm identified a clear divergence between the price action and the RSI indicator, signaling a potential trend reversal. But what about false signals? How does the indicator prevent us from getting whipsawed by sudden changes in the market? The answer lies in the risk management component of the indicator, which uses a combination of position sizing and stop losses to limit our potential losses. By combining the power of machine learning with effective risk management, this AI indicator is able to provide us with a level of accuracy and reliability that was previously unimaginable. So what's the takeaway from all of this? What are the key points that we need to remember when it comes to using AI indicators in day trading? First and foremost, AI indicators are not a magic bullet. They are only as good as the data they are trained on, and they require a deep understanding of the underlying mechanics to use them effectively. Secondly, AI indicators are not a replacement for human intuition and creativity. They're a tool, not a solution, and they need to be used in conjunction with our own judgment and experience. Finally, AI indicators are not a one-size-fits-all solution. Each trader has their own unique needs and preferences, and what works for one person may not work for another. So what do you think about AI indicators in day trading? Have you had any experiences with them in the past? Let us know in the comments below. And don't forget to check out our other videos for more trading tips and strategies.